Japan has suddenly become one of the most volatile markets in the world. The recent sell-off in the Tokyo Stock Exchange has its benchmark Nikkei index creeping into bear market territory. The pullback comes after a massive rally that saw stocks hit 5.5-year highs in May, driven by an aggressive series of fiscal and monetary reforms designed to revive growth in the world's third-largest economy. But as Kaori Enjoji reports, the new policies are not without risks.
Sanae Miyamoto just bought a $50,000 watch, one reason why sales of luxury items at this store have doubled this year. I bought some stocks, she says, and if the dollar is worth 100 yen, her advice is to buy in Japan. The Tokyo stock market's rise since Shinzo Abe returns as prime minister is fanning the wealth effect. By printing and spending massive amounts of money, Japan hopes to reverse 15 years of decline and reclaim the luster it lost to China.
That the territorial conflict that Japan and China are going through right now has made it very clear here in Japan, no, we don't want to become a colony of the People's Republic of China. We do want to be a strong economy, and that's the big driver. That's something that's fundamentally different from anything I've seen over the last 25 years in Japan.
The promise of change has weakened the yen. Exports soared, and the economy grew 3.5% in the first quarter. Early signs, economists say, that Abenomics is working. Skeptics say the structural reforms expected in areas like agriculture, energy, and healthcare matter the most.
Prime Minister Abe also announcing that the third arrow is also equally important, that is on structural. That is going to be the hardest politically as well as economically and socially, because it really hit differently from what you call it the interest group within this economy.
By joining talks to enter the Trans-Pacific Partnership, Abe stoked the ire of the farm lobby, his party's traditional support base.
I would say the most important one is a TPP, the Trans-Pacific Partnership. I think that this is really likely to encourage Japan to make a structural reform, in a way that it can really lower the service and investment barriers.
Government officials say they know their experiment carries risks. Japan's energy bill is soaring due to the weaker yen. Rising bond yields are rekindling fears of whether Japan can service its debt. Prices are rising, but salaries and hiring are not. Still, public support for Prime Minister Abe is strong at nearly 70%. That's likely to push his party to another victory in upper house elections in July. What's less certain, though, is whether the economy will continue to trump a nationalistic agenda that's closer to his heart. For Nightly Business Report, I'm Kaori Enjoji in Tokyo.
Japan's prime minister said today deregulation is a priority for the nation's growth strategy, and he's set to announce a new round of reforms later this week.